Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Louw, PSG Wealth Old Oak, David Shapiro, Sasfin Securities. Be sure to send your questions through. You can email us stockwatch@bdtv.co.za or on SMS 41392 or on Twitter @BusinessDayTV. Use hashtag Stockwatch. Gents, appreciate the time. David, let's start with you. There's a bit of a mini listing boom happening on our exchange. I mean, last year we buy cars and boxes. Stop laughing, listen to me. We've had this year Optasia, we're getting Cell C. Fidelity might be coming, the security company with the best Natal rugby player ever. Coke Bottling Africa next year. Suddenly, what's happening here?
No, it's wonderful that companies are coming to the market to raise capital and are not being snapped up by private equity businesses. I don't know Fidelity. I don't know who owns it. Who was it? Val Bartman, wasn't it?
Yeah, he's the CEO.
Well, you don't start with him. You know, I don't know if he still looks like he used to look, but any rugby player, you know, if he tells you to buy shares, you listen. So, especially if they own a security company. But look, it's a wonderful movement. I must say I've been a little disappointed in like the outcome of We Buy Cars, and certainly Optasia hasn't kind of fulfilled up. Maybe it's a bit rich, but it's a wonderful movement. You know, it's may it last. So we've got another 5 on. How many do we lose though, Simon?
I know. They are leaving faster. But also, these are not bad sizes. We've had some of those like UK property stocks, dual list, etc. Yeah. This is, and to be clear, I mean, Val Bartman captained Natal to a couple of Curry Cups. I mean, he was the real deal. And as a banana boy, it was exciting. Skulk, I mean, David's not wrong. We're still losing companies, but we're picking up some, which is something we haven't perhaps seen in a bit. I mean, I know I'm being overly excited here, but still.
Yeah, your glass is definitely more half full than David's. No, I mean it's a fact. I mean we've seen a few delistings over the past few years. I mean if we look at that data that's been released every month that state the net foreign buyers or net foreign sellers. We've seen the foreigners being net sellers of South African equities, and I did a bit of a report. I think it's called a little bit more than a year ago. Well, look at the average daily trade on the JSE. And last year, funny enough, it was one of those years where we really, in the beginning of last year, I'm talking about the first quarter, latter part of 2023, where we really struggled to make a 20 billion trade on the JSE per day. I mean, and if you rewind the clock before that, I think that's the levels we've seen in 2016, 2017. So, I mean, and if you adjust for inflation, that's just horrible. Nowadays, I mean, it's fantastic to see the JSE. I mean, we now more often see 30 billion trades on the JSE, which just tells you there's some interest coming back. So when do you want to do an IPO? When do you want to list your company? I've had this conversation last week when we talked about, I think it was Cell C. Yeah. It was Cell C, which we talked about. And when do you want to? And typically, you want to be you're floating your company or listing your company in the highs of the market, because naturally you'll be getting better valuations for that company when you list it. People tend to be not listing companies when valuations are under pressure, and I think a lot of these companies feel a little bit better now to list their companies. Yeah, I don't know Vitality. I mean, a new Val Bartman more as the what's a Transvaal player or flanker. I mean, they had to give him some oranges usually halftime just to tell him, Val, you need to play the other sthat now. He was like a steam train.
He was.
And hopefully manage the company the same. But I do think the interesting fact about, you mentioned the Optasias, the We Buy Cars, you can clearly see the interest that's coming back into South Africa is not towards the smaller mid-cap companies, because that's where when you look at the monthly data on the large caps, mid-caps, and small caps, you can see every month the largest, let's call it, interest are still with our large caps, not our mid caps, and definitely not our small caps. We've seen some upticks in the small caps, but I think we need a bit more optimism in South Africa before we start seeing interest in these smaller type of companies. Hence why we haven't seen, I would think, the amount of interest in an Optasia and a WeBuyCars up to now. But
then, Shalk, I mean, and back to your point around the JSE and the increased volume, and I'm looking at the chart, the stock it's up a little over 50% since the lows of last year. Is this an attractive investment opportunity? If we're seeing 30 billion instead of 20, that directly bottom line for them, and a couple of listings doesn't help, but I mean, they're doing more revenue, just simple 101 math.
Yeah. Always been a great dividend payer. I mean, it's been a company that's been a dividend. I mean, we know Dr. Layla is stepping down now, beginning of next year. Now, I did a bit of a calc when she started in October 2019. I looked at the performance of the JSE since then, and I looked at the performance of the JSE share price or total return since then. With the JSE share price, the actual JSE company, lagging the JSE by a country mile. But we've known it's been a tough, let's call it 3-4 years. And only now, over the last, let's call it 18 months, really strongly picking up. And yeah, it might just be something you can put on your radar. I mean, when you see these type of new listings, if you see the average daily trade increases like it's doing, I mean, naturally, I would say 1 and 1 should be 3. I think the JSE should be benefiting out of this environment.
David, notwithstanding accusations by a small miner, notwithstanding Competition Commission investigations, would JSE be on your radar? Would you buy an exchange? I mean,
it's always been well run, despite the criticism. And to be fair, I don't think the listings or delistings had anything to do with the JSE. It had a lot more to do with just the quality, the quality of the economy, or the lack of growth in the economy. There's nothing that they could do to bring listings. And as conditions are changing now, so people are coming to the market. So, you can write a book on the change in stock market, the ETFs that have come, unit trusts and so on, taken a lot away from individual companies. But it's a very, very well-run business. And I think Valdine, who's taking over, she's been there. They find CEOs within. Remember, Layla was there before. She left and came back.
Yes.
So I would never criticize the JSE. I think from its listings when it first came in about 1887 or something, always been superbly run. Old-fashioned sometimes, ran club types, but I mean, generally really good.
I was there.
And Scott's right. I take the volumes every day. I look at them every day to see if there's anything there, and you're certainly seeing a pickup.
Yeah, and I was this morning for some ETF IPOs, and I mean, it's a happening place in a degree. So, David, something that's definitely up. Woolies came with a trading update, and for the first time in quite some time, the market actually quite liked it. I mean, the food is doing good, no surprise. Fashion, home and beauty, surprisingly not doing well. Heck, even Country Road kind of maybe okay. The market liking it. Woolies, is this the beginning of the beginning?
I like the sign. There's something here. I said, well, if this is happening, maybe we really are in a bull market. And I've got a very good feeling about markets. I'm not on that. I'm not in the bubble category, everybody talking about bubbles in the US and so on. I'm in the completely different camp. And you've got to recognize what's happened to the JSE in a difficulty. Yes, it's gold and platinum and everything, but there's an underlying strong current here that's lifting share prices regardless. Maybe you can't see it now, but you can feel it in those volumes. And that's what's called, when you look at the volumes, that's telling you something. There is money floating around here that's going into this market. So I'm bullish. I'm bullish on where we go, despite South Africa. Despite our lousy economy, this market's strong.
Shalk, notwithstanding your stock pick later, the Woolies update, I mean, I got to say, I saw it and I opened it with the usual trepidation, and I was pleasantly surprised.
Yeah, I think there was a few, let's call it, positives in this announcement. I mean, David mentioned Country Roads. It started with my biggest negative of the company. I've often been saying they should just get rid of these Australian businesses. Yes, they've got rid of David Jones a year or so ago. But this is the two companies that's really been eating into the profits. And if I could really have my first choice, I would like to see Woolies Food and Woolies Other being listed as two separate entities. But I mean that could just be a nice to have. I know we won't have that either. So yeah, I think that was the one side, and I think the second point, which stood out for me, is them buying back their shares. And it's usually when a company starts buying back their own shares, then you know there's something cooking. And when they know what's going on, and they bought back something like close to 7 million shares. I think it was 380 or 300 something million rands worth of stock. So that was a positive. And I think the market is just suddenly realizing, because there's some valuation. When you look at the valuation of Woolworths, and you look at the food business alone, if you value that company, that is worth close to 56 rand per share. I mean, now the share price is trading at 51, 52 rand per share. And so by buying the company now, you're getting all the fashion, the beauty, all these companies that's not, or parts of that's not doing well currently, and picking up, you're pretty much getting it for free. So yeah, Woolies is also one of those companies. Don't own it, so I can get excited on the company without putting money into it. I do think it's something that one can have a look at for now.
And a question coming through from Tabang. He says, I was holding Murray and Roberts when they got suspended and went into business rescue. Will I get my money back? Who wants to break the news to Tabang? Because he'll get.
Well, in the Jewish religion, when something like this happens, we say Kaddish, which is the death prayer. So he's not going to see his.
He might get a few cents, maybe a few cents.
It's sad. It's absolutely. I can't tell you how big this company was, how massive it was. How it was one of the great businesses in South Africa as a construction company. Remember, it did the Gautrain at the time of 2010. Yeah. I think the shares were 60 rand.
They went to 100. They went to 100 rand.
Did they?
Yeah.
Unfortunately, I think construction has fallen apart. There's no fixed investment going into the country. They go into Australia. Where do they go up? I don't know, Middle East, wherever they went, and whatever value they kind of built up, destroyed. It's just sad to see these businesses go. It's not the only one.
It's not.
Can you remember Basil Reed, Group 5? We can keep going.
Not Santova, there was another one. Yeah, there's been dozens. None of them have made it. David, question coming through around Nvidia. I'll throw it to you. SoftBank sells its position in Nvidia yesterday, and the question is, should I worry, or is SoftBank kind of like Jim Cramer, which is a little bit of a sting, but SoftBank
you mean get things wrong or what?
Gets things wrong, I don't know. SoftBank doesn't fill me with much. I mean, look, people sell steaks all the time, I suppose.
Well, I think the worry about it is that here is a superb business, the poster child of the AI boom, and you're selling it to go find, I don't know, little infants somewhere around. I don't know what they're going to do with the money, and I think that's what scares the market. Say, hold on a sec, you've got a winner here. Why don't you just stay with it? So they're trying to raise cash, which I think has been the whole way that SoftBank has run, to go find or invest in other areas of AI. That doesn't mean it's the end of Nvidia. I still think they're. He's next in line for President of America, of the USA. Old gentleman, he's just screaming at you. But I wouldn't get too perturbed.
They did say that they want the money to do a JV with OpenAI. So I suppose in a sense they're just getting a little bit closer. Skalk, question coming through. We saw the Goldfields update today. New dividend policy, nice and aggressive. We saw AngloGold Ashanti yesterday. Dividend policy, nice and aggressive. We expect nothing less. The question is, please ask the panel for their preferred gold stock as gold is back above 4,000. Skalk, which one would you look at for gold?
It's like me need to choose which my favorite kid. You know, I've got let's go 5 or 6 kids, and I need to choose my favorite one. I just before we go to the gold, I'm literally still opening on my phone. I need to read this because this is a wonderful tweet. It says, sold Nvidia to buy OpenAI, which will use the money to buy more Nvidia chips.
Yes.
Bubble much?
It's called vendor
I think that
financing
is
circular.
That is, I mean, everything is so intertwined. It's like this massive. I agree with David. I think that this is a fantastic company, but I mean, I just want to unravel this. And well, okay, SoftBank, it's not a small transaction either. You know, close to $6 billion dollars. Yeah, but to move from Nvidia and go into OpenAI, I don't know. I agree with David there. You then rather you stick with Nvidia. Okay, now my favorite stocks. I mean, gold stocks. Yeah, I think when you look at the two announcements, very much expected. I think let's not look at the actual announcement. Let's look at the trend. I mean, this is something we've been talking a lot. You and I have been talking about this many times, where we said the companies are printing cash. They are so cash flow positive as it currently stands. And I think the next step, you're either going to see these companies announce massive transactions, but the problem is finding transactions in a gold environment where the gold price is trading at $4,000 is it's like trying, what's it, hen's teeth. So the second point was, then if you can't find a transaction, you need to look at paying dividends. And this, David, I mean, I think we've been on the floor back in the days where there was more gold stocks than other stocks on the JSE, and I can't remember when I've seen gold stocks being either without debt or being able to pay this amount of dividends. Now they're doing both. They've got no debt and they're paying dividends. So I think this was sort of expected. Anglo Gold came out yesterday stating that they're now gonna do sort of a reset, a quarterly payment, paying 50% of free cash flow. And naturally, as you mentioned, Gold Fields also this morning coming out stating that they will do a 35% payment of free cash flow. And you could see the share price movements today. That's really interesting because the one literally went way up. Anglo Gold really responding extremely positive on this more aggressive payment, and Gold Fields taking a bit of shots, taking a bit of a breather today. Favorites? So I'm still sticking with Gold Fields. I do think they're well diversified currently, and I do think that's still my preference going into the gold mines. For listeners out there that says, well, I'm looking for something more international, there I would most probably be inclined to look at a ETF called Van Eck Gold Miners, where they pretty much invest very nice ETF where they invest in pretty much all these largest gold mines, which Gold Fields and Anglo Gold's also part of that mix. So yeah, I think for now, you need to be in it to win it.
David, we're going full circle. I remember back in the 80s, gold mines used to be dividend payers. That's what they did, 8, 9, 10%.
They were. And that's because it was a wasting asset. And I think that's a big fear. If they can't replace the ore body, remember, each mine was a different lease area, a different mine. That's all. They changed that. And that was a big worry, that it became a wasting asset. And that's why they had to pay out dividend. My big fear is that Gold Fields suddenly starts to say, there's still a lot of gold 5 kilometers down below in the area, in South Africa, in the Witwatersrand, and they start trying to get that like they did South Deep. So I prefer them to keep giving us back dividends, even if it's a wasting asset, and one day they've got no more gold left.
So which would be your pick of the?
It's the favorite kid story. I think both of them, Jackie. I haven't got enough insights to choose one or the other.
Okay, no, that's fine.
I did think Anglo Gold. The one other thing that stood out for me is how they stepped up the production. I mean, that was a great thing. This is typically what you want to see in an environment where the gold price is doing what it's doing. You want to see these gold mines suddenly ramping up production like they've never done before. And again, that Anglo Gold has done extremely well. So, but again, just If you want gold, don't be too picky. Just make sure you get some gold for now.
Yeah, let's get some gold. Let's go to Bidcorp. They had an update today. I think they were at a capital markets event or something like that. David, a good update from Bidcorp. And what's it? I mean, look, they're never going to be the sexy gold miners or Nvidias or anything like that, but they bundle along and do very well in what is currently tough conditions.
They're flat on the year.
Yeah.
In an environment where the JSE, I don't know what's it up 30% this year because of the gold stocks. This one's flat. It's done absolutely nothing, which is surprising, and it's not really a reflection of the business. They continue just to trudge along. As if you went through that statement, I didn't go through in detail. It's a 5% here or a 6% there. Nothing brilliant, but steady. And it's that kind of business. Would I buy at these levels at a time where you've got the gold price going up, you've got Nvidia and everything? It's a hard choice. But, it's steady. I mean, it's a very basic business. They've got delivery trucks that bring your cheese to the restaurants or to the canteen and so on. That's it.
Yeah, no rocket science. Scott, for you, Bidcorp, I mean, it is a boring business, but we don't hate them boring.
No, boring, in fact, is beautiful.
Yeah.
I mean, we're sitting every day. I switch on my computer or iPad, and first thing I usually see is somebody calling tops on the market every single day. Stating how elevated the markets are. How we are sitting very, very close to a let's call it crash or correction. So for those listeners that is buying into this, let's call it fear mongering. I do think that companies, like David mentioned, I mean, it's been flat, still has been growing. It is a quality. I mean, I'm really talking about a high quality company in terms of a high quality management, well diversified, not just in terms of Europe. It's Australasia, it is in the UK. It's a well diversified rand hedge company, and most probably one of the reasons why it's been flat, because we've seen a stronger rand. If you tell me at current levels you're either buyer or seller of Bidcorp, I would definitely be leaning towards buyers. And just for the record, I do have a few Bidcorps, and I definitely are itching to buy a few more.
Let's quickly, we need to go to stock picks. Actually, we've got a couple of minutes. So stock picks, Shalk, you're going with Shoprite. Trading update earlier in the week. You've picked this one before over the last couple of months, and you are doubling down.
Yeah, here we go. Double up to catch up. No, it hasn't done a lot since then. We've seen, after the call, it went up to those, let's call it 300 rand levels, and very similar to we've seen. I mean, people will note that last week I picked Mr. Price, and you've seen a trend lately in these retailers, these general retailers, food retailers and clothing retailers, that they've been under pressure, and I think that pressure sort of creates an opportunity. Like I said, Shoprite has moved back from the $300 a week or three ago. Now trading, I think yesterday it closed at 270, 275 rand. That just created an opportunity to buy into a great, well run quality company. I think in an environment which I think can do better. We know we're sitting in an environment that interest rates are a little bit lower. Hopefully interest rates can go a little bit lower, even lower. And with this boom in some of these commodities, that can only be good for our economy. And if it's good for our economy, it will eventually be good for both our food and our clothing retailers. Yeah,
and historic PE 20, it's not demanding by Shoprite standards, and dividend yield of almost 3%, which is chunky. Absolutely it is. David Foschini.
Yeah, that comes with a health warning, and the health warning is that I don't know why I chose it, but I mean, I looked at Woolworths today, and when I saw the response of the market to Woolworths numbers, I was looking through the charts and I saw Foschini, a company I know well, a company that I buy from, whether it's, I know the brand incredibly well. They're down 50%, and they're back where they were, I don't know, 5 years ago. Now, I know that they've got balance sheet issues, maybe overgeared, but still, it's got a good brand, very well run, spread throughout the country, a number of, diversified base. Yes, they are trying to go down the scale a little bit, but I thought at these levels, I'm bullish on the market. Okay. Number one, I'm bullish on the stock market. I think we're going in for another good year. So this would be my punt of the year. This would be a real Hulaman type punt kind of, this I think is going to recover.
Okay,
so,
this is not a...
Well, it's either this or it's going nowhere. Or suddenly you're going to go down to Melrose Arch and see the doors chained, something like that.
As long as it's not a copper 360 punt.
Yeah,
as long as it's not a copper 360.
You should never have said it. You've given my stock picking skills away.
David, you sound like that. You sound like a kids game where they play with a cricket bat. They call it 6 or nix. It sounds like you're telling us it's going to be a 6 or nix.
That's exactly it. Yeah. 6 and nix. And Foschini, PE under 9, dividend yield almost 5. Sure, we'll take that. That's all for Stockwatch today. Thanks to our guests, Louw, PSG Wealth Old Oak, David Shapiro, Sasfin Securities. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.